Hi guys, welcome to honeystocks.com weekend analysis for the weekend of the 20th of April 2019. Hope you've all had a really good time off. Hopefully you've had the time off work and all the rest of it, but I'm just throwing this out there late on Sunday just because I'm in a really good mood this weekend. I'm in Mexico, the sun's shining, and yeah, I thought I would get this out, and hopefully this will give those of you that follow me closely some incredibly good ideas, as always, for the forthcoming week. But before I get into it, just please, as always, pause the video, give that a quick scan over, make sure you're comfortable with it. Now, if this is your first time here, what this really is a presentation to just give you a few trade ideas backed up by technical analysis that I think you should consider for the forthcoming week. These are mega popular, from my various social media platforms, etc. So hopefully this helps you in some way, because I know what the feeling's like. Sometimes Wall Street just swallows you into a black hole. I know there's probably many of you out there that are maybe learning from losses at the moment. Maybe you're trying to learn trading from YouTube. So this will hopefully just give you a little bit more insight into a more consistent approach. It's the trend-based technical approach with elements of swing trading thrown in. And if you do like the video, please feel free to subscribe to our YouTube channel, give it a thumbs up, let me know what you think. I appreciate any feedback that you might have. So rather than me rambling on, I'll just get through these charts in the next 10-15 minutes, and hopefully it'll help you make some profit for the next week or two. Now, as always, just get started. Now, first thing I want to say is tech that is very close to breaking out. So this is a triple Q. Now that's going to be good news for tech just in general. So I feel like tech is a place that we want to be. I mean, it's obviously been on a huge rocket ship for the last few months. Hopefully everybody's made lots of money out there. If you've not made any money in the last few months, it might be something to consider just changing your approach, because it's been almost impossible to lose money since the beginning of January. So I just wanted to make you aware that tech is close to breaking out. And if it does break out and we get continuation in the market, then that's certainly going to be good news for tech. So first up, we have Square now. Yeah, sometimes, guys, trends end. Sometimes our wishes are just not reciprocated by Wall Street. So rather than, potentially buying this break to the downside, it's got the potential to absolutely be a falling knife. Now, I'm not a fundamental guy. This might well, represent value to you. And if it does, good for you. But for me, as a technical guy, I'm really looking to just take advantage of high probability environments. We didn't get the breakout that I think most of us wanted last week. It actually broke to the downside. So we just simply stand aside. We say, okay, that's fine, Square, we'll revisit you another day. So just keep an eye on this trend line. If you're even, super conservative, set the price alert for $80 and just revisit it again. If you're out there and you're holding Square Inc., then obviously, there's nothing I can really do about that. But as for those of you that are looking for new entries into the market, I would suggest that those are the levels you want to be looking at, and you have to be aware of a potential falling knife here. Micron Technology, very similar looking chart, obviously, to Square Inc. there. Again, we're just looking for a break to the upside on this trend line here. So I think Micron Technology is one that I think should be on the radar. But absolutely, we need to be considering now things like earnings season and how some of the big stocks can have a direct impact on some of the correlated stocks within the sector, etc. So Micron Technology, absolutely, if this breaks out, then it should be a catalyst for a decent little move to the upside. Next up, we have Team now. They reported earnings last week, and it was good earnings with lukewarm guidance. Now, this is sometimes an area where we can look to maybe take advantage. Those of you that follow me closely will be fully aware of my earnings strategy, and I absolutely look for this all the time. In fact, I did it in last earnings season, positive earnings, Wall Street tanked the stock. I sent an alert out to my client group, and lo and behold, we got a huge move to the upside. So it has the potential to do this again, but certainly $100 needs to hold as support for the stock. I think if it moves below there, then all bets are off and we just say, okay, we'll revisit you another time. I think the ticker for this one is TEAM, TEAM. Next up, we have Match. Yeah, it threatened to break out last week there. We didn't get the continuation. We got a lukewarm breakout, followed by a complete, head fake, or fake breakout, I should say. And it's just a case of now waiting to see what happens with price. As we can see there, earnings 7th of May. So we do have a couple of weeks to play with here. So certainly if you get a move above $60, I think 61.50 probably represents the area that you want to be considering it. But certainly, assess all of the technicals once price reaches that level. Next up, we have PayPal. Now, PayPal reports earnings this week. Now, just to let you guys know what my specific strategy is, I have an incredibly popular blog on this subject. I know that earnings is a time in the market where a lot of traders just get burned to death. Now, the way that I look to play earnings is I want my stock to be at least 10% in profit in order for me to hold through earnings. So my client group got an alert on PayPal on a breakout above $100. It's moving through the levels. So it might well be a time to just tighten up stop losses, say thank you very much, PayPal, and revisit on the back of earnings, and we see what happens. And the reason I have that 10% rule in place is just to protect against any potential gaps down overnight. I find the 10% sort of buffer is a decent, what's the word I'm looking for? It's a decent way for me to protect any potential downside, because we all know that stocks can gap down 15, 20% on occasions. Although it's quite rare for it to happen with a lot of the blue chip stocks, certainly it does pay to have an earnings strategy in place. So hopefully you guys can consider that, and obviously just act accordingly. Next up, we have Nike, or as you Americans like to call Nike. I don't know which one is correct, but in the UK we certainly say Nike. So yeah, I think it's obviously starting to move again. We had a bit of a decline. We got an expected bounce up to the upside, and now I think it might well be representing a decent entry into the market at $90.50. But certainly, again, do your own due diligence. Make sure that when price reaches that level, that you're assessing all of the technicals that you need to in order to make that an attractive proposition for you. Next up, we have Progressive Corp. Now, incredible trend over the last couple of years. I think most of us appreciate that. Certainly, it had a bit of a decline here, huge dip, started to build a base. I think on the back of positive earnings, huge move to the upside. So certainly, I think if Progressive can, hold above 74, hold above this level, and it doesn't move back into this area here, then I think we can be bullish on Progressive Corp. I think that the move to the downside here might have been down to potential news events, perhaps big payouts on the back of Californian fires, etc. So certainly the trend there speaks for itself. Bit of a dip, absolutely, but it's now starting to show strength again. Now, I've been asked a lot about this one this week, Stone Coal Limited. Now, this is the problem that you guys have. Those of you that are in there trading this and thinking that you've caught the next big thing or the next big juggernaut, I totally get it. There's usually a lot of hype behind companies. I know that Mr. Buffett is big on this. I think Berkshire Hathaway have quite a big stake in this one. But with recent IPOs, there's not any real structure to price, and it always represents a bit of a gamble, because as soon as you get an adverse news event, or perhaps they just slightly miss earnings or guidance, you absolutely can see a massive overreaction to the stock, and this is exactly what we've got. We've got a massive overreaction. Those of you that have bought in here, you obviously got hit with a huge gap down overnight. There's nothing you can do about that. It's just one of those, and certainly for me a few weeks ago, I was telling everybody, and this was my chart, I said, look guys, this is an optimal entry, maybe above, $45 is the place to be. And hype doesn't mean anything in this game. It's one of those, you just have to identify optimal entries into the market. You need to manage your positions, and you need to avoid any potential damage or limit any downside. Those of you that were buying this dip on the way down, it just doesn't make sense on any level, technically, fundamentally. So certainly, hopefully you guys that are holding here have found your bottom. This is why I've highlighted it here. This does not mean that I would suggest going in and buying the stock. Certainly for me, it's just a case of just saying, okay, Stone Coal Limited, let's see what you've got. Let's see if you can go on a bit of a run, start a bit of a trend, and set that price alert for 45 and just wait until it gets there. I wouldn't be looking to take any chances with this one. Next up, we've got Planet Fitness. Now, a few weeks away till earnings, but I think the trend, when you look at it and you look at over the last 12 months, the trend really speaks for itself. So certainly there is, with the momentum indicators, it's maybe a little bit overextended at the moment, so I would maybe look for any sort of pullback here. But certainly, I think anything above $70, if we hold above $70, then I am absolutely bullish on Planet Fitness. And this is one that I highlighted way down here when this base was getting built. We all know the saying, you've probably heard me say it a million times now, the bigger the base, the higher in space. That's exactly what happened. We got the breakout with continuation and off it's gone. So certainly above $70, I think Planet Fitness, I think we've got to be bullish, and certainly that's the way that I'm kind of looking at those stocks at the moment. Now, I do still have a few more stocks for you, but if you're watching this, and obviously, this is maybe your first time here, you're maybe thinking, what the hell is this? Well, as you can probably see just from the first few charts that I've gone through there, I have an emphasis on optimal entries into the market. That's really what I'm known for, because I think once we get an optimal entry into the market, it just makes things a lot easier. So certainly that's the way that I approach the market. I don't like to trade on hope, so I'm not a guy that's catching falling knives. I'm not looking at fundamentals. I'm 90% technical, 10% fundamental, and that's the way that I like to trade, because I think as soon as you're trading on hope and you don't have any consistency or strategy, that's pretty much what you're doing. And I think we've all been there at one point or another, and certainly I look to avoid trading in that manner as much as possible. So if you are enjoying the video, as I said before, please subscribe to us on YouTube, give the video a thumbs up, comment, let me know what you think, and certainly I'll take anything on board. Now, I just want to touch on a couple of other areas of the market. Okay, now this is the S&P 500. Now, very similar to tech, where we obviously want to move into new highs and so forth, but we do need to be conscious of potential resistance levels. And obviously at the moment we are now slowly approaching resistance. We're only a couple of percent away, so we need to be mindful of this. If the market rejects at this level, then that's not going to be good news for the individual stocks. But if we get a breakout, then that's obviously hopefully going to be good news, and the market starts to take the next leg higher. Now that's the S&P 500. This is a Dow. Again, we're approaching key levels, so we need to be mindful of these. Tech is obviously hovering around support and resistance at the moment as well, so absolutely factor this into your decision making. If you don't understand how it all knits together and how it all works, then there may be a couple of things that we can do to help you, just if you stick around for a couple of minutes once I've finished the charting analysis. But absolutely, I think with the Dow, it's something that you absolutely need to be aware of. Now, again, I've had a few messages this week about Turtle Beach. Now, again, I don't get it. Now, for those of you that don't know, last year my guys got a chart on this as a short opportunity. It obviously moved to the downside, and it's done absolutely as expected. But with any downtrend, you just need to understand where support and resistance is, and I've tried to highlight this, as much as I can. Again, very similar to Stone Cold, I'm not looking to catch any falling knives, and in actual fact, because of the strength of the downtrend, I think if this breaks below $10, I think most of you guys just need to look and see what happened to GE last year, which again was another short opportunity below $10. I think my guys got an alert on that, and there was a 40% move to the downside before it found its bottom. So again, I think Turtle Beach has the potential to do that as well. So those of you that are perhaps looking for short opportunities, I think $10, you can probably look at that. And for those of you that are looking to buy it, I don't see why. Like I said, I'm a technical guy, so I'm not really looking to play that game. I like to trade with price rather than against it. And certainly price is telling me at the moment that Turtle Beach is going down, so why trade any other way? Now, we also have Starbucks. Now, again, we've got earnings this week coming up with Starbucks. So certainly this has been moving along nicely. So again, it's going to come down to having a strategy in place for earnings. Like I said before, the 10% rule works for me. That's the approach I have. I also don't like to take any positions in the 7 days in the run up to earnings either. So certainly for those of you that are maybe looking to buy Starbucks for earnings, I would suggest it's maybe a good idea to just hang off and wait and see what happens, because earnings is a complete lottery. There is absolutely no way to tell which way the Wall Street is going to take the stock. Even if it's good earnings, Wall Street will still tank it. So yeah, I don't see the point in taking any new positions, certainly this week. It would be very much a case of managing your existing position and certainly, going from there. Now, as I said to you before, if you are someone that maybe struggles a little bit with your trading, if you struggle for some consistency and so forth, there may be a couple of things that we can do, because I know that the path, for any trader is a difficult one. It's often a lonely one as well. So maybe there's a couple of questions that you could ask yourself. And one of those that I find is quite powerful is, how much happier would your life be if you could, cut out all the noise and just make some good decisions with your trading, with your entries? And what if you didn't feel like you were at the total mercy of the stock market? What if you had a trading plan and a rule set, for the rest of your life? How much of an impact would that have on you? I know the impact that it's certainly had on me, and it's had on the guys that are part of our program, etc. But for complete transparency, on my website, I publish every single trade idea that I post into my client group. Now, that was 2018. Feel free to jump onto the website and have a look and see exactly what I've recommended on the dates, the price, etc. And obviously 2019 has been on a rocket ship. It's been very difficult to get things wrong, but certainly this is what optimal entries do, and this is what optimal entries do for me. And I also know that the journey for most of you traders out there that maybe struggle, I know that the journey looks something like 2 years of learning from losses and learning from YouTube and reading books. And I know, eventually you're probably going to say that to the stock market. And although it's a very funny caption, very funny picture, I know the reality is anything but. So if this resonates with you, if this style resonates with you in any way, shape or form, we genuinely try to help. We believe in making a difference, and certainly you can jump onto our website and have a look at the testimonials that we have. We've got clients from LA to New York to London to Hong Kong to Australia, all over Europe, and It's truly a global community. So if you have a style at the moment that just isn't getting you any results, maybe the question you need to ask is, do you want to keep doing it the way you're currently doing it? Maybe you're getting that inconsistency, maybe you're not getting the results, maybe you're getting those losses, maybe you've just got a stressful style of trading. Like I said, it doesn't have to be that way. So do you want to keep doing it the old way, or do you want to learn a new way? I think that's probably the question that you need to ask yourself. And if you feel like learning a new way is something that you would like to explore, like I said, we can do something to help you. On our website, all you need to do is go and click on apply. Choose a time that suits you, and we'll have a conversation. We'll have a super relaxed, informal conversation for 20 minutes. You can tell me what you struggle with. I'll see if I can help. And if we cannot help, we'll point you in the direction of somebody that can help. But it's very, very straightforward. Like I said, go onto the website, click apply. There's a couple of details for you to fill out, but the more information that you can give me, the better. It just means that I can come on to our conversation with as much information and just get straight to the point and try to help you in some way, shape, or form. So if you are somebody that struggles, like I said, go on and choose a time and we'll have a conversation. I know that most of you from the US and Canada who follow my work closely, the good news from your point of view is you have an opportunity to talk to me at the moment. I am working from Mexico, as I said before, so I am on the same kind of time zone as you. Normally, I'm on London time, so certainly, if this resonates with you, please just go on, choose a time, and we'll have a conversation. And if you've stuck around to the end, thank you very much for watching, and I hope to very much speak to you soon. Thanks.